Good morning, everyone. Today is the 27th, I think, on my phone. 26th. Today is Thursday, as I understand it. This is Brad Matheny. I got up just a little bit ago. Nice night. Everything is good. Markets were kind of flat. Kind of taking a look at things this morning and seeing where we're at. I've been busy working on content for my new book. Really, hopefully, you guys like it when I release it. Should be, I'm hoping, um, fairly soon. I've still got quite a bit of work on it. Seems like every time I turn around, I see something I need to add or want to add to it, and it's probably going to be that way for the next couple of weeks. But getting pretty close to hopefully being done. It's about 115 pages, 8.5 by 11 right now. Probably finished out about 150, 160. But it goes through quite a bit of content. Give you an idea right here. Guide to Trading. This is the book so far, and 119 pages right now. But really going through the table of contents for you. This is what it's all about. What is trading? What is it about? It pretty much teaches you, my style, my concepts, a lot of my proprietary things, excess phase peak patterns, Fibonacci price theory, twinning price structures, Tesla 369 structures, anchor bar theory and exhaustion patterns, Gann angles price structures, price waves and energy, how to use time as an element, how to avoid flagging. It talks a lot about protective capital. Up here, protecting your own capital, how to manage your trading account so you don't blow up your trading account, get too aggressive. Then it goes through a bunch of examples on how to trade, what you should be doing, what you should be looking for. And right now I'm in the process of doing like the wrap up closure of the book and expanding out on these new sections that I've added: the twinning phase, the 369 structure, and the anchor bar theory. So it should be a big assistance to you. And it teaches you things that nobody's ever shown you before. Okay. It's going to show you things in price that you've never seen, and it's going to teach you things to understand price completely differently. Now, I started this book as a guide to try to help traders, my subscribers, and other people. I thought, you know what? Before I pass away, whenever that's going to be, I want to make sure I'm trying to do something to help people understand, particularly those people that trade like gamblers. You know who you are. Okay. I get messages from you all the time about, help. I've gone through so much money. I don't know what I'm doing. Well, you got to slow down. Trading is a long game. It's about literally hitting base runs. If you're into baseball, or think of it like golf, okay, the idea is not to make a hole in one every hole. The idea is to keep your score as low as possible, your failures as low as possible, trying to get, an extra 20, 50, 100 yards with every shot. And you don't, like I'll tell you a funny story. So, a long time ago, I got started golfing, and I used to go out on Friday afternoons because everybody wants to go out on a date or go to the bar or go to the movies on a Friday. Nobody really wanted to go golfing in the afternoon. And of course, I worked the stock market hours. So by 2 or 3 o'clock in the afternoon, I could go golfing, twilight, out here in California. So I go to the local course out here in Orange County, and I get paired up with this 82-year-old guy who wants to bet. All right, whatever. I'll bet you a couple dollars a hole. No big deal. This guy literally was like a golf pro. He wasn't shooting under par very much. But I'm telling you, this guy with his little 140, 150, 160 yard drives right down the middle every hole. I mean, he would take a par five, 300 plus yards. The guy would be 150, 160 in the first strike, 140, 150 on the third strike on the green, putting for three, and then maybe four out of a par four or par five. He was parring it every time. On par threes, he was just knocking it out of the ballpark. This guy knew the course, had a perfect, well, I don't want to say perfect, but knew his swing, knew what he was doing, and literally shot probably three under par for the day. Me being the weekend whacker, I go out there and I put up a, plus 10, plus 12, plus 13, whatever it is. But the story, again, being the guy that beat me was consistent in and out, never really deviating too far from the straight down the middle. Always, trying to keep it right on line, right in the middle, one step forward at a time. And that's kind of what trading is. It really is just keep it short, keep it simple, get in, follow the trend. Don't be too crazy. And again, this guy, took about $35 from me that day. Okay, no problem. I lost, I learned, but lesson being, really, trading is not about having your great success story. I turned $1,000 into $43 million in 2 weeks. Nah, that doesn't happen. Really, what does happen is slow, consistent, protect capital. Really straight down the middle. That's what you're looking for. Straight down the middle, taking advantage of opportunities when they set up, and trying to be on the right side of things. Okay. All right. So now let's get into this and show you what's going on. Today's cycle pattern is a rally and counter trend mode. As I mentioned to you yesterday, really what I do is I look at let me go back to that. Rally and counter trend mode. We're slightly bullish on the trend cycles and bullish on the daily weekly bias. We are looking at an upward cycle. So, really, as I told you guys, what I do in these counter trends is I look at the 3, 5, 7, and 10-day general trend, right? So, we come in here, look at the 3-day trend is up, the 5-day trend is up, 7-day trend is slightly up, and 10, 11-day trend is slightly up. So general uptrend is going to put us in a scenario where we would be looking at a counter trend bar potentially being to the downside. And that's kind of how I look at these trending versus counter trend modes. I look at 3, 5, 7, roughly 10, 11 days back or bars back to determine where the trend is. So today I would be expecting a counter trend rally, which will be a pullback to the downside, is what I would be expecting. And again, I'll do it again so you can see 3 days up, 5 days up, 7 days up, 10 to 11 days fairly up. And again, that gives me my directional trend as being generally bullish. We are in a counter trend mode here. Thus, I would be expecting a downward bar today. Okay. Come back here, get rid of these. Oops. So what would I be expecting? Well, we've got this this closing with a gap, kind of a bar here. This is call it a doji. It is a small range bar. We'll call it a doji. This is more like a real doji here, but you call this a spinning top or a doji type pattern. And you've got the gap up. I warned about how this gap can sometimes be an exhaustion pattern, especially when we've had 3 of them, which we've had in a row to the upside. This could be an exhaustion called a last gap or a 3 gaps pattern. If we get a big black bar to the downside here, this would set up an evening star formation rolling to the downside. Could be an ominous topping pattern. We will see. Remember, as of right now, the weekly is quite bullish. Okay, big, strong upward pattern on the weekly. And we are technically still bullish. Okay, but if we were to get a rollover with strong selling today and continue downward and confirm this incomplete dark cloud cover pattern, we were to get any downward activity here, this could be a pretty ominous change in trend, like a last kind of engulfing or scouting pattern type of pattern with this gap. What that would intend or entail would be a bigger breakdown having to come down below these lows. So 593 lows would be required or lower on some sort of a big breakdown pattern on the weekly chart. This move here depends on what happens today and tomorrow. Could easily come down and try to fill this gap. We'll see. Generally, though, like I said, guys, we are still bullish. We are in an uptrend. The pattern suggests a pullback bar, maybe trying to fill this gap. We'll see what happens. But generally, we are still bullish. So I don't want to mislead you. We are looking at the same type of scenario here on the, get rid of all my drawings. Same type of pattern here on the QQQ. We've rolled out of that upward channel, stalled, gapped, moved back into a very clear kind of a doji in an evening star formation. A downward cycle bar here would indicate a three river evening star pattern, indicating we could fill this gap very easily on a pullback if it happens, which based on my pattern here, even though that sometimes they don't happen all the time, exactly, it's calling for a bit of a pullback bar here. So we would theoretically be expecting some sort of a downward type of a move today. Don't know if it'll be closing that gap, but likely. But again, getting down below this level here, call it the 525 area, 526 area, would be necessary for a larger price breakdown. If it were to be shifting into a bigger breakdown, we'd need to get below this 526 area. Clean and simple. And then we would likely have to come back down into and close this gap at 492, 490 roughly. Okay, so there's where we're at today. Remember, we're still generally bullish. Okay, I don't know how to keep telling you until it breaks. These little pullbacks are just like these little pullbacks. They happen in price, they occur. The fact that we're outside of this channel, as you can see, I've drawn this widening channel here. This was the initial channel. So, if you come in here and where would I find it? Either going to be here or maybe here. Yeah, we can use this probably. Nope, GAN fan. Let's try that. Up here to here. So you can see how we've gone through this expansion phase, and these are basically, call them slopes or degrees of slope. So you can see how we've moved up this degree fairly consistently, and then we broke into this moderate sideways degree. Now, if we were to break down this level here, 519, 520 on the QQQ, we would be moving into a weaker slope. This would be the 2 1 to 1. Can't see what that says. Looks like it says 2 to 4 or 2 to 1. So again, this would be a fairly big breakdown if we got below this, let's call it right here, type of a level based on these GAN fans. Okay. So again, that puts us at a fairly strong breakdown level, potentially looking at a big move to the downside if we got below 520 on the QQQ. Okay, gold and silver are. Silver had a big rally, obviously, last night. 4 o'clock this morning, big rally, 36, almost $37. Gold kind of lagging. I think gold is still going to move to the upside, like I told you. Silver is now kind of outside of that consolidation range that I talked to you about, and where gold is still kind of trapped in that range. I still think gold and silver are making a big move to the upside personally, and I think gold lagging right now is somewhat telling in the fact that I think that gold will, as a lagger, make a big move to the upside over the next 20, 30 days. But, this move here in silver is pretty solid. Got a nice little breakaway here. Silver's very much lagging. I think silver's got to get up into the 41 to 44 area. So, if I were to come down here and highlight, well, I've highlighted it way back here. That's been my target for many weeks, but The idea here is that silver moving up into this 41, 40 to 44 area to me seems very realistic. And that would put gold moving very aggressively up into, as I've highlighted back over there, that would put gold moving very aggressively up into the 37 to 4100 area. So again, we've got a pretty big move in store, in my opinion, for gold and silver. It's just a matter of getting there. Now, this may seem excessive, but that's a 16, 17% rally, between 11 to 17% rally there, and this would be a 11 to 17% rally here. It's not that big, really. 10, 11, 12% in gold, not that big. It happens quite regularly. So, where we're at, guys, with gold, let me go to the cycle patterns, take a look. Gold cycle patterns are a blank pattern after a momentum rally in counter trend mode. Remember, counter trend mode, we take a look at the last 3 days, 5 days, 7 days, and 10 days, 10 or 11 days, determine the trend, and then counter trend will be basically whatever counter that trend would be. Today's a blank pattern in trend mode. Might get some carryover of this momentum rally and counter trend pattern and moving into this top pattern. A top pattern, as I've taught you many, many times before, is a type of a peaking pattern that occurs in the market. A top pattern typically is something like this: rallying up into resistance, finding resistance, and then rolling back over. Same type of top pattern we get on a fairly regular basis. It's just basically a rally into resistance, and then we stall out of that resistance. So we're looking at a pattern of moving into a top this weekend, and then we get a pause and a breakdown into the weekend, and then we get a counter trend rally, and then rally, and then pause, meaning a nothing pattern, inside breakaway, and then we move into rally. So we could be moving into a very strong rally phase for gold and silver. I mean, we could be looking at a pretty solid 5 to, call it, 10 plus day rally phase for gold and silver. Could be very, very powerful, guys. Try to pick some options, some call options up off of these lows about 2 weeks, 3 weeks into the future. See how that plays out for you. Remember, book anything above 20, 30%, call it good. Okay, lastly, Bitcoin. Come back over here. Bitcoin 1073. There we go. Stalling out right where I told you. That's that upper channel. Let me come back in here. Hold on. Didn't mean to do that. There's that upper channel. That blue line coming across here shows that upper channel. Downward channel. Again, these are covered in my book, talking about price channeling. These are all very common techniques. We've got this nice stalling pattern. We've got the rotating topping pattern. We stall back out over here, roll back down to the downside, puts us in the 99, 98,000 area potential target again. We need to have some real catalyst to break through this. I don't think that we're going to have it. I think that Bitcoin is really going to be struggling. We are looking at this rolling trend. You can see it. I'm just getting rid of lines here, guys. Get rid of that. And, really what we're looking at right now is we have broken this longer, bigger channel. You can see it right here. We've broken this channel, moved into this sideways flagging. I mean, yeah, I could argue that on very strong news, we could be rallying to the breakaway. But again, we would have to get back above this 109, 10 area or 110 area in order to start mounting a big breakaway expansion phase. Right now, we've got this A, B, C, D, E potential pattern here. We need to kind of see what happens back over here, whether we get any big breakout to the upside or not. Otherwise, failure is going to represent a downward trend here. Remember, price always attempts to move higher or lower, meaning Fibonacci price theory teaches us that price always wants to make higher highs or higher or lower lows. If it fails to do so, then it's going to attempt to make the opposite higher high or lower low. So in this particular case, ladies and gentlemen, looking at price, we can come in here and we can argue that we had to get above this high, which we didn't. If we stall back over here, failure to get above this high, then we are looking at rally failure here, moving into a downtrend, which is going to try to take out a recent low. The only low that we have that is recent that we can look at is right here. So we would be looking at a move of at least down, $8,000, $9,000. If we fail here, we're coming right back down to here or attempting to. If we break above this level, then the next target is here, and then off we go. So again, simple price theory. Failure below a recent high means that we have a chance we could come here. Have we failed yet? No. Are we close to failing? Yes, probably. We will see over the next couple of days if this holds up, if we get any rally or not. So we will see how this plays out. But failure at this upper channel, like I've shown you, is a pretty good indication we're likely to come back down. We need to break above it on a strong uptrend. Right now, because we haven't started the downward failure yet, we are in an intermediate uptrend. So right now, you're looking at an uptrend kind of in the market. This is short term, intermediate term. You're looking at fairly bullish trading right now. And again, until we get that breakdown, we're in a kind of a bullish mode here. So we've got this channel, this upward channel, been bullish since back over here where it took out this high. Really, it's been bullish through here. All the way up. Till we kind of break that channel, we are in an uptrend. Okay. 22 minutes. I'm going to go back and work on the book most of the day today. I'm going to be doing a live event with my subscribers. They've got a lot of questions recently with the markets kind of stalling and rolling. I'm sure you guys do as well. But going to try to answer a bunch of questions today, show a little bit more about the book and what I'm working on, and go from there. So go get some, guys. Talk to you later.